I want to start with a de-inversion of the yield curve. To me, this has been one of the least talked about, most important aspects of what we've seen. What's your take on why we've seen this sort of unwind in a way that's been very unexpected?
Well, historically, the yield curve inverted. It's widely believed it's inverted because it's predicted recessions quite accurately. I think there's a step before that that has been widely ignored, and that is an inverted yield curve typically signaled that something was going to break. There's going to be a financial crisis, and that crisis would morph into an economy-wide credit crunch where even good borrowers couldn't get money, and that's what caused the recession. This time around, we've had some financial crises in the crypto market and in the SPACs and a lot of the ARK stocks. And yet we really haven't seen an economy-wide credit crunch. I mean, clearly credit is very difficult in the housing market and it's getting harder to get in the auto market, but it's not the kind of credit crunch we've had in the past. And therefore, I think we're probably more likely to get a soft landing out of all this.
Wait, but Ed, just to sort of put a bow on it, are you saying that this time around, yield curve inversion does not signal recession?
I think this time around it signals falling inflation. It doesn't necessarily imply that a recession's coming. As you know, this has been the most widely anticipated recession of all times. You might recall that even at the beginning of the year, there were people who were saying that we're actually in a recession. We had two negative quarters in the first half of the year, and the bears were very happy to announce that that was at least a technical recession. But yes, I think we're not going to get it. I'm sorry?
That is a technical recession, right?
Well, I mean, for one thing, I always say any number that doesn't support my story is either wrong or is going to be revised. But I mean, those numbers could easily be revised in positive territory. They were barely negative. So I don't think we can really characterize that as a recession. Certainly, the index of coincident economic indicators show no recession whatsoever. They're an all-time record high in November. On the other hand, the leading indicators are scaring everybody because they are pointing to a recession early next year. So if there's going to be a recession, it's going to be soon, and that's what the markets fear.